Hello everyone. Digital assets have faced a tough market, but the build one has not stopped. This session brings together market structure experts and institutional investors to discuss what the current cycle means for long-term adoption and where the next opportunities may be. Let's welcome our moderator, David Jenkins, from Open Markets, and our panelists. Let's give them a warm round of applause.
Thank you, everyone. This is going to be a really interesting panel. We've got such a great group of people up here from a really wide spectrum of the industry, and so I'm looking forward to digging into some of the topic today. And it's a rare opportunity, I think, to have such a wide representation. So today is all about buying the deep, or really the analysis of what might be called a crypto winter and whether or not that's real or not, and where adoption is actually going given that backdrop. So that's the topic we'll be speaking to today. So what I thought I'd quickly do is just quick run through, quick introduction, and then just one sentence on where you see adoption today of digital assets. If we could start off with yourself.
Thank you. Good morning, everyone. Chris Knight, Managing Director of LMAX Digital. For those of you who don't know LMAX, we're a institutional operator of exchanges globally in FX, CFDs, and crypto. Institutional adoption, we're fortunate to count 40 or 50 banks as clients, 100 asset managers, and it's quite an exciting time. We're definitely not seeing a hibernation or a crypto winter. We're seeing a hard rewiring right now. So infrastructure is being built, and it's here to stay.
Excellent.
Hi guys, Andrew Lila-Tapin. I'm at Maybank and I look after product. I spent time in TradFi for many years. I've also spent time directly in the crypto space, and now I'm kind of come back into TradFi to look to bridge all of that together. The way I see it is that adoption of digital assets in APAC is definitely growing, but there are some challenges that sort of we need to face to take this to the next level, to make things a lot more seamless and efficient for the end user, but it's definitely a growing space.
Great.
Hey, good afternoon, guys. Zen Kwan from Revel Digital Family Office. I started off in the industry with Bitcoin ATM in Asia, bought in the first Bitcoin ATM Asia in Singapore in 2014. So since then, I have been in the space and ending recently with Digital Family Office, focusing just on crypto source of wealth. So managing a few family offices on that front. And what else do you want to talk about? I think what they will call me the mutant, because I sit on two boards, one on the CFA Society and one on the SS, which is the Crypto Association in Singapore.
Hi, Luke Boland, Standard Chartered Bank. I look after, head up the fintech coverage globally, based here in Singapore. We focus on supporting, what we now call our traditional fintech clients and our digital asset clients across exchanges, custody, stablecoin issuers, market makers, liquidity provider, OTC desks that are typically crypto native. Been with the bank 6 years, and that was probably about when Stan Chart sort of started our journey in this space, and where we have come from to where that point was. Even I'm surprised, and I think even the reflection of the number of people in the bank that are working in this space kind of reflects to what the industry. And also great to be on a panel here today with so many familiar faces as well, which is fantastic.
Carl Mohan, EVP Financial Services and GM for International for Crypto.com. Now, just like Zen, I'd like to use the word mutant. Could be a Teenage Mutant Ninja Turtle panel soon. So I managed two things. One, I bridged the gap between TradFi and the crypto world for the firm, so expansion into tokenized assets and so forth, as well as looking after the international markets. Seen 3 winters now. This is the 3rd winter, so feel a little bit battered and bruised. And finally, I think, when I started in the journey, you wouldn't have bankers on the panel on any conference where crypto was being spoken about. I think that's a sign of adoption.
It's really interesting, isn't it? I think everyone's calling it the institutionalization of the digital assets industry. I think you can count the number of people in suits and from banks now, more so than you could a few years ago. But just to kick things off, I might direct the next question at yourself, Chris. So, you touched on it. You mentioned, the crypto winter and whether there was any slowdown, and you didn't really feel that was the case. Could you elaborate a bit on that in terms of where you see the adoption now, and is it different now to any previous crypto winter?
Yeah, so I guess I could talk about that in a couple of directions. So in the bank space, the teams are huge. Luke's just mentioned I'd love to know how many people at Standard Chartered have digital in their name. It could be 60, 80, 100, I'm not sure. These teams are big, and it takes an incredible amount of time to rewire infrastructure. And that's happening. And as I said, it's not going to stop. It's big investments, and it does take a long time to accomplish. So it could be like things like central clearing, a new clearinghouse for the future institutional adoption of digital assets. Could be new consortiums from Canton Network or Ripple, stablecoins, etc. It takes a long time to work through the legals and the like. But in the in the adoption, I guess we've also seen from the crypto natives now trading TradFi products, or TradFi assets. So we've launched perps last year at LMAX, which have been very, very successful. Peaking just under $3 billion a day. 30% of that can be a gold perp. So, and a lot of interest from crypto natives now pushing into traditional asset trading.
Yeah, it feels like an incredible time, doesn't it? There's so much convergence going on and so much infrastructure being put in place. I mean, one thing I'd really like some more color on, I might direct this question at yourself, San, is from an allocator's perspective, do you see that as part of portfolios now? Are you actually allocating to this market, and has that changed at all?
I think the question is, are people still allocating in the market? Okay, I think one key thing is that I think there are a few different kind of allocator in the space, right? So I think if you really like something and something is on sale, it makes you happy, right? So for me, if you look back, my previous life before crypto was in institutional real estate. So money is made when you buy, right? You know the exit strategy. So I think same thing. I'm actually happier in a bear market. I know it's because you actually feel that you have more time to either beef up your team, beef up your capital, or reallocate the allocation, because ultimately you are a long-term bull. I'm a long-term bull, right? But of course, in the midterm, what am I doing? I focus a lot on income strategies. So I do a lot on, I sell puts with covered call for a while now, for the past 2 years, to actually generate income on the holdings. So my holdings will, I would say, if you look at the portfolio, will be anything between 25% long to 75% long. So I do swing trades, but in the meantime, focus on the income strategies. Again, I do a lot of styling puts with covered call right now. So in terms of where am I looking at the next, what's happening in the space, I think in the short term, we do see some of my peers, family offices, actually took out the capital because they just called me and they said, Zen, I can't take this anymore, I can't. So unfortunately, I think they took it out over the last quarter when it really hit like a negative 30% on their NAV, right, for themselves. And then obviously there are some market neutral funds that are doing very well. Because I think last year there were another camp that think that 126,000 was reached in October 6th. I remember that day. Yeah, then after that 10/10 happened, and it's sort of like the energy sort of like was lost since 10/10. But I think for a lot of long bull among us, I don't know how many of you are long bull. Actually, it gives us a bit of a longer leeway to really put ourselves ahead of a lot of allocator in the space, knowing what to allocate in. A lot of the portfolio got shortened, meaning that I think last year there were a lot of altcoins that's going to fly kind of strategy. Last year, people with holding like 50 over coins. I think early this year, a lot of people start to hold cash and narrow down their holdings to maybe top 5. I think just last month, the biggest runner was not Bitcoin. The biggest runner on top 10 was actually Dogecoin, right? So a lot of people didn't realize that, but I think we can talk more about the strategies. But what I'm saying that there are some people who actually took out their capital and on the sideline right now, but there are also a lot of family offices which doubled down.
Yeah, that's very interesting. And I'd really like to hear the Standard Chartered view on that. So as a TradFi bank, also with a very strong digital assets offering, how do you see it playing out on your side from the demand perspective and also your roadmap on adoption?
Yeah, for sure. Well, I mean, first of all, it's always summer in Singapore, Carl. So it's all good, even in the digital asset sector. And I think, and you're right, Chris. Yes, there are a lot more people in the bank now with digital in their title. And look, whether that's it has been a positive across the bank. And look, you know, whether it started during the stablecoin summer or before then, that is certainly a turning point, I think, within our organization and leading up prior to that, but even obviously the industry. And that's opened up us to then, you know, really have a much stronger team across the bank to build in the digital aspect. So it's no longer, you know, doing things on a siloed approach. It's how, you know, our launch of digital asset custody, what are all the aspects that come into that need to be addressed, and not just doing it in one team. It's, you know, how does our risk team prepare ourselves for offering products and solutions to that? You know, obviously the regulatory team, the engagement. It's not creating new teams, it's existing teams that have really been driving that. And I think it is just the beginning. So while, you know, in the speculative or the trading market, you know, that's not our space as much to play. You know, we have launched trading and we have clients that, you know, are looking for spot and execution. It's how do we bridge that gap into the wider acceptance in the space, and that's happening at a much faster pace than I think we even predicted, no matter what the state of the price of Bitcoin is.
Yeah, very interesting. I mean, it doesn't feel at all like a crypto winter to me, to be honest. Like, I actually feel like there's just so much activity going on those institutional side to make things easier and more portable and etc. So sticking with that theme that we were just on. So from your perspective, sometimes people call out things like custody or regulatory clarity. When it comes to a big team, how are you seeing that playing out? Like, do you see fragmentation as an issue across different custody providers and regulations?
Yeah, look, I think as a bank, right, you know, we're covered by, you know, a number of regulators, both in our footprint markets across Singapore, Hong Kong, Dubai, and beyond that. Obviously, you know, the PRA and the FCA in the UK, which we work with as well. Look, I think that's what it is, and what is positive, I think now, definitely, you can go to a regulator, you can engage with a regulator, and what we've, I think, definitely look at is you have to bring all of that story together of what we might be looking to do and what our roadmap will be, and what products and what clients that will be involved. And that's probably a lesson. So whether it's from the trading, whether it's from the custody, whether it's launching a stablecoin, as we have in Hong Kong, and work very closely with the regulatory environment to have that happen, I think that's really key, and early engagement as well. But look, I think we've come a long way, and there's definitely really strong conversations and partnerships where in some cases where we've got new products that we want to launch, we can go to a regulator and find a way to make it happen, and that's all good.
Yeah,
Can I
fantastic.
maybe just add one thing? Sorry, I just want to throw things around a bit, right? If I can compare 2021 to 2026, 2021 bull market, a lot of cowboys appeared, a lot of shoddy exchanges appeared, those that, you know, shall not be named anymore, that starts with F and ends with X, including them, no longer around, and the regulatory arbitrage is gone, right? So the days of setting up your company in Seychelles and servicing the whole world, that's gone, right? The reason being is every major market has some form of regulation now.
Yes, that's true.
Right? Now, the challenge is historically been the US, right? And I think once, again, we all know the moment US moves, they move fast. And once they have their regulation in place, which is a matter of time, the rest of the world has to follow suit. The reason being is because America generally attracts capital. It's always been capital center, right? So all this capital is going to move, and before that happens, every single market that does not have regulation, if they're not thinking about it, it's going to be challenged when it comes to capital mobility from these markets.
Yeah, it's a very good point. I mean, whilst there's a lot of regulatory fragmentation, I guess, in the finer details, it's true that everyone pretty much has a framework there now mostly. And I think you're right that a lot of people will follow once the US goes, because really that's the main capital formation market. But I'd be interested in your perspective also, Chris, in terms of, what do you think is missing? Is it payments? Is there anything still missing, particularly in a regional perspective, bringing in your experience from Europe with Olmax?
Look, missing, there's still an incredible amount of credit risk in this market. Come here, clearly an old guy, TradFi, and I have to try and be careful to say it's all broken and a lot needs fixing. But credit is still a big worry. Even since FTX, people are taking too much credit risk, in my perspective. We're working, I'm working with a company called Clear Token to be a central counterparty, a central clearer in the UK. We're working on a number of other solutions to, also with a tier one bank to be intermediate trades, to be the central counterparty. We just don't think that the existing framework is right for the large institutions that want to join now. So from my perspective, that's the biggest thing I'm working on. And coming from TradFi, I know interoperability is something that grows the whole market. And you have to, as an exchange, you have to be quite brave to open up your exchange to make it easy for people to deal with other exchanges. But that tends to be the next launching pad for volumes and adoption.
Yeah, look, I commonly hear that the lack of interoperability is a barrier, particularly on places like real-world assets where you've got lots of different fragmentation, and porting across different systems can be quite expensive. How about Maybank's perspective? So, as a big regional player, what do you see in terms of your development in Singapore and the region in terms of the industry and what might be holding it back?
I mean, we are a regional player, so specifically in the ASEAN region is where we sort of have our presence. And I guess the regulatory fragmentation is real for us, even though we've operated in these markets for many decades. And then we do have a moat versus incumbent crypto natives coming into all these spaces. There still is a whole bunch of fragmentation amongst all the regulators, because ultimately they're there to protect their domestic client. And there isn't necessarily there's a whole bunch of overlap, and like Carl said, when the US moves, the rest of the globe tends to move in a similar way, but there is always nuance, and we need to sort of navigate through that nuance. And then we sort of have compliance-like programs that just fragment across all of our various markets. And so for us, that's something that I think is a challenge from that sort of regulatory perspective. And I think in order for there to be real sort of traction, there has to be some sort of coming together of this sort of these regulators across the region for us.
Yeah, look, it kind of feels like a problem as old as the hills in a way, like the regulatory fragmentation. And being a bank such as yourselves, I'm sure you're used to it. I mean, it's nothing new to have a collection of different regulators in a region that you're trying to navigate. So in some ways it feels a little bit, if you can master that, it's a value add, right?
Yep.
So just
Might just quickly add, I mean, we often get asked the question, which is the best place to get a license, right? And I guess there's many different answers that can be. How quick, are you looking just to get a license for speed, or are you looking to build a sustainable business? And as you said, I think exactly right. While the details of the licenses in different markets, there are nuances, I think, we have to, particularly in APAC and even in ASEAN, even if you look at markets like Philippines that has allowed good adoptions and sandboxes and so forth, I think, we have to be a bit proud about this region of how it has been progressive in the digital asset sector, whether the stablecoin licenses, even Japan, as I said, Hong Kong, and even here in Singapore, and the work MAS has done, that is way better than what, as you said, what the US was prior to before. So I think we have been lucky. And being at the forefront, and then it's a little bit of keeping that momentum going in this region to keep the adoption growing. And it could always be better, but I think we got to feel good of where we've come from as well.
Yeah, it's incredible progress. It really is. And so Zan, coming back to you, what do you think needs to be? So you mentioned some money being pulled out, sitting on the sidelines, while some of this plays out. What do you think needs to be done to bring that money back in? for the allocators? Like, how do you think those people would get back into the market, like the family offices, the high net worth? Is there anything you think needs to be solved?
I think the good thing is you saw the rise in market cap in stablecoins as well. I think beside their projects going on, the fact that when they I won't say they went off ramp, when they started to get out of the market, a lot of them are still holding stable coins, and which that you know that with a click of a button, this huge capital can roll back in again. But I think just now Carl mentioned about it's rare to see bankers on the, like in early days. I think one thing that I noticed is that 10 years ago, like basically all my bank account was being shut down by the banks, right? Including my 3-year daughter, that time was it 3-year-old daughter's bank account was being shut down. So now we have less of the issue. Like in a way you hear less banking account got shut down, which to me is a huge progress. You take whatever we can get, right? Like, yeah, seriously, at one point we have no functioning bank account just because you are an entrepreneur in that space. And then for my daughter, just because her mom is an entrepreneur in that space, right? So we were having issue paying school fees. So 10 years forward, I think now we do hear it's easier to have bank account, that is great. So coming back to your questions on where are people looking at right now, I think people have moved on from just holding digital assets directly. And of course, when I was in the US last week, the whole MicroStrategy was talking about the STRC, right? So there are also derived product around digital assets. And also, there are a lot of development which what we are looking forward, which is the agentic finance, and and with that, which is really the coming together of AI and crypto, which for the crypto native, we are very excited about probably looking at the first listed DEX in the US soon, within a year. You're talking about not just a centralized exchange, but a listed decentralized exchange in the US. Hopefully that happening within a year. So there are a lot of pockets that as an allocator could invest in. Right, you are talking about the different various funds, the direct holdings, the private equity space. We are still building. In fact, last week, one of the huge M&A by Bullish, right, 4.2 billion worth. So even though it's deemed as a winter, but there are a lot of activities still going on in terms of M&A. So in terms of allocator, we are seeing the universe being expanded this time. And also because of the convergence of AI and crypto, there are also a lot of, I was just in a pitch event in Vegas, 15 pitches, and I felt like I just need to invest in all of them because there's just so much going on, especially with the agentic finance front.
Yeah, look, I find it hard in my head to segment the market between, money market funds and real world assets and then agentic finance and where people are playing on that spectrum. I think what I might do is I'll get the Maybank view and then I might go to you, Carl, after that. So from a Maybank view, what demand do you see? Like from your clients coming in for digital assets, do you see the same type of thing, that breadth and what they want to get exposure to, or are they more focused on a particular area?
I mean, it depends on the client segment, right? So if I break it down into, say, like our high net worth or our wealth clients, many of them already have allocation, but they want that in their Maybank portfolio. They want that attributed in a Maybank portfolio. And so what they're kind of looking for is, they may have been early in the digital space, perhaps in crypto, and then they want to be able to park it at a name that they trust, right? And then have that attribution attached to it as well. And so, I mean, that's mainly sort of like, I guess, an allocation and an exposure play. So that is real. We do see that increasingly. I mean, there is some form of like interest around real world assets. So there are handfuls of clients which do have some form of real estate, and they want to be able to perhaps derive some income from it. And so there is pockets of real world asset interest, but like mainly for your wealth clients, it is where can they allocate or where can they store this exposure which they have on the digital space. When it comes to, say, like our corporate clients, they're more about like, how can I do things better than I do today when it comes to payments, when it comes to FX. And so, that's when like stable coins or tokenized deposits or perhaps even CBDCs start to become are more real. And so, you know, for Maybank, obviously, like, you know, in the region that we play, there is efficiencies that can be gained from tokenized deposits. And, you know, we've done pilots with a particular client where there was the transfer of Sing to Ringgit, and there was the payment as well from Sing to Ringgit. So, you know, that was on chain, near real time. And so, like, as long as like there is a benefit to the end client, I think that's when we sort of start to get some real traction.
Yeah, I completely understand the viewpoint there. I mean, as a bank and a regulated entity, I can imagine, you know, what you offer out to your wealth clients is going to be very important to make sure that that's, you know, safe and a minimum amount of risk. But love to hear the other end of the spectrum in a way, like Crypto.com, huge international player. Where do you see things like agentic finance? Do you see people doing, you know, where's the adoption from your point of view?
Maybe let me take a step back first, right? What problem did crypto solve, right? That suddenly group of bankers have suddenly woken up and said, wow, we want a piece of this action. Look, the first one is 24/7 trading. Never existed before crypto. Never, ever existed. Someone in a weekend could start trading. And if you look at all movements in TradFi, correlates to trading activity that occurs on a Sunday in the crypto world. So if Bitcoin is going down on a Sunday, Monday morning, markets open, and you see a similar trend, right? So crypto has been able to solve for something that my TradFi brothers have struggled for years. That's number one. Number two, what the crypto guys have learned from my TradFi brothers and sisters is that we need some degree of maturity and discipline. The days of, you know, shooting from a hip doesn't work, and like what Zan was saying, 5 years ago, selling puts or covered calls didn't exist. No one would buy it. There was no liquidity in the market. And today, you could generate yield from these tokens. Is clearly, you know, something from the TradFi market, right? So I think the convergence is happening, and what we are seeing in the market today, whether it's ups, downs, is this discipline that is occurring. But I think the whole play about tokenized real estate, tokenized real-world assets, it's all because of the adoption of the 24/7. Finally, I think for me, which is where Zan was getting at, is this whole thing about collateral mobility, right? So previously, the whole thing about stablecoins, and even till today, the majority of stablecoin transactions is around trading activity, full stop. Not for payments, not cross-border payments, not for card payments, none trading, right? Now, when I exit a position and holding cash or cash equivalent in this case, what do? I'm not generating yield, and so tokenized money market funds is godsend for some of these traders, right? You know, your family offices would rather sit on a tokenized MMF generating yield while waiting for the right moment to go back into the market, which again didn't exist 5 years ago.
We try to minimize fiat holdings.
Yeah, that's very true. I mean, they certainly paved the way, and now that we've got institutional adoption, there's more of that rigor coming around, you know, the governance, the compliance side. Luke, perhaps I could get your perspective on, so do you feel like we're in production phase for some of these ideas now? I mean, there's a lot of talk about mobility and parallel movement, but are we there yet, or are we still doing pilots?
Yeah, I mean, first I feel like I should talk about bank accounts. So there's some in the audience that know how much I love talking about bank accounts. Look, it's... I think it's definitely, we definitely see it beyond that, you know, POC or doing a project for a once-off. Yes, there are still challenges to do at scale. And when you do things, it takes time and having the right counterparties to be involved. And if we're talking about, you know, one of the projects that obviously we've worked on with our custody platform in the UAE is collateral mirroring and using a tokenized money market fund to use as collateral, and whether that be a TMF or a stablecoin soon to come as well, or other assets in the tokenized form, and using that for trading. So that's live, that's real. We'll look to roll that out in our other custody markets that we'll have, whether that be Hong Kong, Singapore, or Europe as well. So it is beyond just doing it for doing its sake. It's gone beyond like that You can't do it in isolation though, and the stablecoin actually is probably a little bit of what has helped drive that. As you said, from a 24/7 perspective, as much as I can try and make fiat move as fast as the blockchain, without having the stablecoin settlement layer has really opened up that optionality. And I think that will drive where stablecoins, yes, the big push is around payments, and there is value there, but the way the stablecoin will come into the regular financial market ecosystem as that moves more on-chain and more on the 24/7 basis, though I'm not sure how many of us really want to work 24/7, but that is what is allowing that to happen. And I think it is, it's beyond sort of just tests and projects. It's people that we now very much look at, we will do things only if we can do it at scale.
Yeah, that is really interesting to hear that, because I'm not even sure myself how much of that, ability to use collateral for additional purposes is actually real, but it seems like it is very real, and you're actually doing that now. So, yeah, finally, could I get your view on this before we move on? So stablecoins have obviously been a big unlock, but, are they a payment story, or is there more to it?
Yeah, just I think what Carl and Luke have been saying is it's simply capital efficiency is what's being solved. 24/7 trading, especially since Trump has been in power, he tends to bomb on the weekend or say crazy things after 5 p.m. on a Friday. You're incredibly negative having a large position. We saw gold and silver fall 30% on a Friday and into the weekend in late January. Stablecoins, this is real world example. A year or two ago, our broker clients may have been stopped out, run out of collateral. We would have been showing them risk reducing prices only over the weekend. With a stablecoin, they can reload collateral to us and continue to trade all weekend. It feels now like stablecoins are like sending an email, and fiat is like sending a letter in the post, and you're waiting for the post office to open at 9 a.m. on a Monday before you can send it off. And then you're not quite sure when it's going to arrive. So,
or if it's going to arrive in full.
Exactly right. So, so we're saying that we term it hyper-efficient capital or hyper-efficient collateral. And to me, that's been the biggest eye-opener since I've joined the crypto industry.
I feel like the cat's out of the bag on that. I mean, clients are just asking for it, whether they're TradFi or more digital native. I mean, they just want to move money around, and they're like, well, why can't you do it? Because I can see it happening with stablecoins and other things. So let's switch gears a little bit, talk a little bit about the future. So, Carl, if you were starting a new business today in digital assets, what do you think you would look at? Like, where would you put your attention?
Definitely bridging the gap between TradFi and let's call it DeFi for the sake of DeFi, right? So the ability to provide the plumbing, I think, is still broken. You see Luke talking about collateral mirroring and all of that. Great, but the market is still not adapting to it. So I would think bridging the gap between the two. I'm big on tokenized assets, but not real estate. So if I'm looking at something, I would be going absolutely financial instruments being tokenized, for the sole reason being is the markets do want to trade 24/7, but right now it's not being able to because of the infrastructure not being there. So perhaps when the market's moving towards high gold prices, you sell Axis and Pixis. That's what I would be doing. And I'm a big fan of agentic AI. I know there's no conference or forum that if you don't mention AI, you're obsolete. So as an exec, I got to say AI 3 times AI. But agentic AI, and the reason, not so much because it's the buzzword, right? I was having coffee this morning with a good mate of mine who designed an algo trading platform back in the early 2000s, right? And he was talking to me about, it's kind of a black box AI-based, very rudimentary, early stage. They call it, I think, neural trading or something. And they utilize maybe 10, 15 variables to predict the movement of S&P 500. Highly effective in doing it. So the AI function kind of like tested out different permutation over regression analysis, right? But if you look at today's capabilities, the number of variables, whether known or unknown, that you could utilize for algo trading is next level. And if you have an AI agent that can utilize a stablecoin wallet to trade 24/7, every single piece of information from a tweet to something that Trump posts would become valuable information for trading activity. And I think that's going to be the future.
Yeah, look, as a TradFi guy who went through the whole algo trading flash crashes of like the early 2000s, it makes me shiver, to be honest. Like, I'm excited, but it makes me nervous. So we've got about 5 minutes left, so maybe we'll just go, in order across the panel here and just look a few years out and how you see it playing out. Like particularly, Luke, Standard Chartered. So do you think digital assets will still be a thing in 3 years' time? Will it just be merged?
Yeah. I mean, whether we have to come up with a new term or phrasing around it because it's bringing all the different elements together. I think if you look at today, whether it be institutional allocation to the investment side, whether it be a treasurer adopting stablecoins as a payment or a corporate treasury having an allocation, the problem has always just been at the moment the friction and disjointedness to be able to do those things. You have to find somewhere to get a stablecoin, somewhere to custody, somewhere to trade, all of those elements. And yeah, as a bank, what we're excited about is the work that we've been doing to bring elements of that together within the organization as we see it happening in the industry. And I think that's just going to drive further adoption as it all comes more closer together. So yeah, you're right. A treasurer doesn't really care if it's a stable coin, a tokenized deposit. They want to solve a liquidity issue. An allocator wants to find a way to invest and be able to trade at an aspect, whether it is a weekend. So I think bringing all those elements together is what we're seeing. And in a conference like that is very much like this.
Yeah, very interesting. Zan, how do you see this playing out? So, I mean, you mentioned a lot already in terms of where it is right now, but in the future, how do you see from an allocator's perspective?
I think I'm very excited the fact that friction are greatly reduced, right? Number one, because now you're just really focused on driving alpha, and I think I mirror what Carl talked about the agentic side in terms of you're not just. I mean, all this payment 24/7 has been ongoing for a decade now. We talk about it. But in terms of really making money all the time with the right proper risk management, one thing I want to talk about as investor is to really avoid being bipolar. I call it like ABC, avoid bipolar in crypto, because I think they got confused. They are long-term and short-term. Are they a long-term bull? If you're a long-term bull, then you should not be jittery in this kind of market. You should be well-poised. And then whereas you have people confused what they are going to do long-term and short-term, I think just forget about that. Really hold your ground, know what you are going for, what is your timeline, and execute accordingly. May it be whatever you could do now or looking forward to agentic finance. And I think I'm looking forward to, I think one of the key issue is like the Gen Alpha are only 13 right now. I'm looking forward to these 13 years old growing up and running Maybank and running Standard Chartered and then see, because to them, this is whatever we are struggling now is just nonsense to them, right? Like they don't understand why are we having issue talking about some of the friction. To them, it's like, wow, what are the opportunity that we could do or grab in this space in terms of what we talk about, I think time is running out, but I think I'm looking forward to the next generation, and probably it's not going to be a new version or now. They're just going to forget about what we are struggling here. They're going to build brand new from scratch.
Yeah, it's so exciting, isn't it? Like all the things we've just lived with, like, okay, we don't have to live with that anymore. So Maybank point of view.
Yeah, I mean, look, I think the space has gone too far for us to really disappear. But the real key word here is there is still to today so much friction in this digital asset space, right? Like if we think about other parts of how we interact with the world, whether that's e-commerce platforms, whether that's internet banking, we don't understand, or most of us don't understand the plumbing that goes behind that. However, when it comes to blockchain, we need to be involved in things like wallets. We need to understand things like passphrases and stuff. All of that is friction. And for us to take this to the next level, that all has to disappear. And blockchain just has to be behind the scenes. And I think, the next generation can build that, right? And they can build that ease in. And then then we don't have to worry about this. It just becomes safer, more efficient, a faster thing for people to interact with. So.
Yeah, very good point. Sometimes I feel like people miss that operational aspect of how you merge the two functions together from treasury and things like that. So finally, Chris, lucky last. So how do you see this playing out?
Look, we're spending all our time trying to build the modern cross-asset marketplace, and that's removing the friction, making it easier. Right now, clients are trading with different entities, different APIs, different, platforms internally. We're bringing all that together. Our vision is that people should be able to buy anything with anything and do that as seamlessly as possible. I think in the future, stablecoins will underpin all that, potentially led by Asia as well, which I find interesting. It's a young, modern population, and they like adopting technology, so I think it can be led from Asia. And, if what Andrew was saying, in the future, you're not going to have to know that it's a wallet or a stablecoin underpinning this. It's just going to happen as easily as sending an email. You don't need to know about the underlying technology. It won't matter if you're on Outlook and somebody else is using Gmail. It'll all just work.
Yeah, fantastic. Some really amazing perspectives. We're out of time. If you could just thank our panelists here, such a great perspective on this development.
Thanks
very
Ed.
much.
Thank you.